Okay, so Crypto Stu here again, and in this lesson, we're going to be looking at market structure. This is one of my favorite um, ways to read and view the market. So I'm going to draw this in for simplicity's sake, and then we'll have a look at some real price action on the charts. But if we have a look at an uptrend, like so. What we notice here is that if the uptrend is intact, then we have higher highs and lower lows. So this high is higher than this high, and this low is higher than this low. And this high is higher than this high, and this low is higher than this low. And so that is a bona fide uptrend where we're breaking through, we're making new highs, and we're respecting old lows. So we are in an uptrend. On the flip side of that, a downtrend would be described as lower highs and lower lows. So we're making new lows, but we're respecting old highs. And this is a really good way to uh, classify whether you're in an uptrend, whether you're in a downtrend, or whether you're in sideways chop. And so it can be really nice and clean in an uptrend. It can be really nice and clean in a downtrend, where market structure is more difficult to analyze is when markets are chopping from side to side. So you may see price action that's something like this, and it becomes kind of difficult to know whether you're in an uptrend or a downtrend. And that's because you're in neither. You're just ranging sideways in general. So how do we know when a trend is finished? Well, one of the first things that we can be looking for, if we're in an uptrend, so we've got higher highs, higher lows, if price disrespects the low and makes a lower low, that's the first sign that we have got that we're going to be seeing something different. Now, price could then go on to make a new high. It absolutely could, and it often does, but it's a sign. So let's restart this here again, and we're in the uptrend, higher highs, higher lows, one final higher high, and then we break the lows. Now, if we go straight from an uptrend to a downtrend, what we would want to see happen here is that the high that the market puts in is lower than this high up here. And then a new lower low, a new lower high, etc. So this break of this low here was our first indication that this market could be turning around. Then when we get this lower high, let me see if I've got, when we get this lower high here and then a new lower low, we're essentially we're confirmed that we're now no longer in an uptrend and we're in a technical downtrend. So market structure can be a really good way to start to begin to improve your ability to read what's happening in the market. And the beautiful thing about market structure is you're not relying on any indicators to help you identify trends. You're reading pure price action. Now, if we look at this on a real chart, well, again, we'll go back to our Bitcoin chart here. All of a sudden, what is very easy to do when you're just drawing lines in the chart, it starts to become more complex because you're wondering what is a swing point and what is, what swing points do I mark? And I try and kind of screw my eyes up a little bit and look at the wider movements rather than just every single up and down that we see on the chart. So if I was drawing this in here, then, and I want to overlay my path here, I would probably be looking at something like this. So we've got higher high, higher low, higher high, higher low, higher high, just, higher low, just, but it stayed within the bounds, and then on to new highs there. So that would be a, you know, a, an uptrend defined by market structure. And so, what we also need to understand in this is that uh, price is fractal. So, we're looking at a daily chart here. If I was going to go and look at a lower time frame, in each of these legs of price movement, we're going to see smaller trends taking place. So, if I just highlight this area here, so we've marked it as, kind of one down move. But if I drop down to the 4 hour chart and see if I can find that piece of price action here, we're going to see something quite different. Let me just delete this rectangle. So if we look at the 4 hour chart, we now have where is my drawing? We now have a lower low, lower high, and this is all really, this section in here is still part of this wider downtrend on the 4 hour chart because we never made a new high and we never made a new low. Then we have a lower high and a lower low. So within the uptrend, in the down leg of the uptrend, we have a 4 hour downtrend that we can see. If I highlight this as different color, it might be easier to see. And then if we were to, look at this 4 hour downtrend and we were to go into, something like a 15-minute chart and look in at this area here, we'd probably see 15-minute structure to the upside. So you have to be aware of the time frame that you are doing your analysis on and the time frame that you are trading on. And the best trading environment is going to be where your time frames are in alignment. So, for example, you're in an uptrend on the daily, and then you're in an uptrend again on the hourly. So you may draw this out here. Let's say this is our daily chart, our daily price action, and we're in this uptrend. We made a new high, and we're sitting on our hands here, and we're waiting for this to create a higher low. And this leg here is the one we want to trade. And so what we would be doing is if we zoom in and go down to a lower time frame, so let's say we're on the 1 hour chart now, and we're in this downtrend on the 1 hour chart. Once we get to a point where we break structure on the 1 hour, then I would be looking to enter a trade on one of these retracements on the 1 hour chart in line with the daily trend. And we'll make that blue. So tidy this up just a little bit. So let's say it looked like this, for example. When this level here, when this high is taken out and we close above this area of this recent high, then we could be looking for an entry to go long on any retracement of the 1 hour uptrend. So we could be looking to go long here, here, here. And that is really how we can look at market structure and how we can use that potentially to help assist us with our entries and our multi-time frame analysis. And as I say, it is much more difficult to do when you're looking at real price action on a chart. But if we look at this daily Bitcoin price here, I started to get excited about the prospect of going long here, and that was because if we draw our structure out, so let's say we were kind of in this down pattern here, we made a new low, a lower high, we failed to make a new low, and then we broke this high. And so we started to see, so we went from bearish, let's call this bearish structure here in red. And then we started to put in bullish structure and that brings us to today. So the key points here from the market structure perspective was that this leg down did not make a new low, and we breached this high, but then the real confirmation came when we got a lower low here that then broke this high. And as you can see here, it would have been a lovely trade on a retest of this high, taking us all the way up there. So that's market structure. Lots for you to go and have a play about with on your chart. I like this path tool to help me draw in structure on my chart. And as I say, sometimes if you screw your eyes up, it helps you avoid looking at all the tiny little movements that happen and focus on the main moves. That can be a useful tip as well. Any questions, as always, guys, tag me or Bill in the chat and we'll get back to you as soon as we can. Cheers.